Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a 1-minute chart of the Dow Jones Industrial Average over the course of today. And you could obviously see that the sellers were in control from the opening right to the close right here. And we closed right on the low. And so what that means is if you're looking at a daily candle chart of the Dow, you'll see that we close with this massive red candle with basically no shadow at the bottom of that candle. Now, not only is this a long red candle, but it's very close to what is known as a bearish Marabuzzo. And if you look at the diamonds, which is what we trade, and a lot of our option members are having a great day today because we're long put spreads that make money on the way down. But that is a Marabuzzo on DIA that doubles up as a bearish engulfing candle. So the body of this red candle is not only engulfing yesterday, but basically the range of the entire week. Now, in addition to that, we have a pattern here that you don't see all that often. And although it's not exactly textbook, it is very close to an island top. What does the textbook version of that look like? Well, it looks like this. It basically is a candle pattern where it starts with a gap up here, trades a little bit, forms this island, and then gaps right back down. So you have this open gap in between the entire range of this island and the previous gap points there. So while it's not exactly an island top, it's pretty darn close. And so don't expect these gaps up here to fill right away. In fact, I'm not moving. Once again, I'm leaving that target on DIA to the downside right there at 317.99. And you can see that the momentum indicators, while they are oversold, they are continuing to move lower on much higher volume. So keep your seatbelts on, folks, because I think we're in for a ride lower. Once we hit this target price down here, I think we'll see a little bit of a bounce. We might see that on Monday and Tuesday. We'll have to see. Ultimately, I think we're going right back down to fill this gap, and then I think we're going to take out the June lows. So if you go back and listen to the last 3 weeks of my recordings, you'll get a good refresher course on what the three phases of the bear market look like. You'll get an idea of what these candle patterns look like on a weekly candle chart as well. Remember, I was talking about these shooting stars. Remember last week I was highlighting these shooting stars, these long shadows above the candle. And last week we had, once again, another shooting star. Look at the weekly chart, how much more bearish this looks than the daily chart. So again, I'm comfortable with this target down here on the diamonds. I'm even more comfortable in forecasting that we'll go out and take out these lows. And longer term, again, if you're following along with my market reports, go back and listen to the last few months of these. I'm still focused on taking out the March 2020 lows right across the board. And I'm going to get into some economic data that supports all this. So it's not just an opinion that I have. Everything is backed up by Dow theory and the charts and what I'm seeing right across the board. So that's DIA. Now, if we look at IWM on the weekly chart, again, remember what I said last week. This was a bearish harami. And I said that the bearish haramis are very similar to bearish engulfing. Here's a bearish engulfing, and here is a bearish engulfing. So usually what follows about 80% of the time is we get lower prices. So, we have a sell signal this week on the CCI down here on the weekly chart. So if you're looking at charts, you could break them up into different time segments, but the weekly chart takes precedent over the daily. And the monthly chart takes precedent over all of them, as I can continue to stress the importance of looking at the three phases of a bear market. So again, looking at the daily chart, my downside target on IWM is 179.75. Option traders, just sit on your hands and enjoy the ride right now. If you're not trading options or you want to learn how to trade options, just reach out to Market Rebellion. I have their phone number in the description box below, and one of the reps will be able to guide you to the best place to go for meeting your needs. And I'm very enthusiastic about what's happening with Market Rebellion and the members. I mean, if you go and look at some of the comments on the YouTube page here, a lot of those folks are members and they're trading and they're sharing success stories. Thank you again, by the way, for all those comments. Like I said last week, it's hard for me to keep up with the questions, but the comments are a lot easier for me to respond to and at least interact with you there. So that is that. Now, looking at SPY, which is the S&P 500 ETF. Look at that red bearish engulfing candle on fairly high volume. So remember, the increase in volume supports the trend or confirms the trend. So if we have a big red candle like that on higher volume, that means the sellers are very motivated. All right, and here's another one where we have very close to an island top right there. Now, it would have been interesting if on this day we went slightly higher and had that bigger gap, because then this would have been an absolute textbook island top. But it's close enough. It's close enough for the technicians to lean on that on the sell side. And you had a very similar event back here where we had a gap up, very slight gap up on this day. And then we had a gap down over here. So this, again, was very, very similar. The patterns are repeating, where this very close to an island top is representing this island top here. And look what happened back in May here and into June. We just had that massive sell-off. So we're on our way to head down to the June lows. I think we'll take those out by the end of September. And then October, we're going to have to see whether or not we increase the volume on the way down and see how motivated the sellers get at that particular point. So for me, this is an easy forecast because all I'm doing is I'm just holding those targets in place. And again, SPY downside target of 399.65. Now, I will be getting to the VIX, but I want to talk about the Qs first. If you look at QQQ, we had a lot of stocks that trade within this ETF that got hit really hard, Apple, Microsoft, and such, and I'll show you some of those charts. While this is not a bearish engulfing candle, it would have had to open up on the high and then trade down, but we don't have any shadow down below. But look at that volume, right? And if you look at the weekly chart on the Qs, pretty impressive how this is pivoting. And then again, look at the CCI this week crossing with a sell signal. The stochastics are heading lower. We have an increase in volume on the way down. Remember, that's telling us the sellers are motivated. And so we're keeping our short positions on while we are also trading energy from the long side. Now, in order to take advantage of those ideas, it's best that you become a member of Market Rebellion, because we had an incredible move in CCJ where we took a long position right here on this day, right there. We took a long position. The alert went out. Many of our members just came right out of the gate in explosive profits over this gap. And then we had a lot of option volume coming in to support that. Now, if this is a shout out to our members, if you have not yet taken your profits in CCJ, I would say that's a good idea to do that if you haven't done that already, because I think that it could pull right back to fill that gap. I know I got sidetracked on that one, but that's again another shout out to our members, and congratulations to them for being able to trade that with such authority. Really just reacted to the signal, jumped on it, all technically related, following the signals, following the trading checklist, and that was a lot of fun there. All right, so going back to the Qs, we have that bearish engulfing or close to it. We have the downside target still in place at 297.84. We might hit that next week, and then we'll have to reevaluate from there. But one of the driving stocks to the downside was Apple. This is, again, an analysis that I did with our members who are trading it. I still have my downside target on Apple down there at 154.32. But look at how nicely it's following the Fibonacci retracement. So I'm expecting a 50% pullback here on the Fibonacci's, very close to that 152.59. I was a little bit more conservative on that target at 154.32. But if Apple and Microsoft keep heading lower with Google and you have Tesla in there, you're going to have a very interesting week next week. I mean, even with Tesla, TSLA is the ticker. It's at the top of this trading channel. We were analyzing this one as well. We do this on Wednesdays. I go through, actually last Wednesday, I went through 50 stocks in about an hour and 10 minutes. And I put my forecasts out and I highlight which ones are the star favorites. A lot of our members get great trade ideas outside of the major markets, of course. But look at Tesla with that trading channel. It's right heading lower right now, pivoting from that upward resistance, which is the trend line. And I think that Tesla could wind up all the way down around 150, 160 as it tests the bottom of that channel line. So again, these are things to keep in mind. You got the top 5 drivers in the Qs are going to be Apple, Microsoft, Google, Tesla, and some of the others. If you look at your Thinkorswim platform right here, you could pull this up and there you go. Top 5 right there. Apple, Microsoft, Google, with the dividends here, more or less one and the same. And then you have Amazon right here and then Tesla right there. And all of these were down big. You see this? This was the driving force today to the downside on the Qs. And so that is what we're looking at there. Now remember, I wanted to talk about the VIX. Let's do that. VIX is the ticker symbol. Now, we have a gap up. This is the weekly chart. Remember, I said this is the first time in many years that I saw 10 red candles in a row. And guess what? This week we broke that stale red light and we have a big, fat, green candle on the weekly chart with the stochastics crossing higher. You see this? And there is a chance. Now, I do give guarantees about gaps on the VIX filling. And I do say that one day that gap will fill. But I want to bring your attention back to way back here when we gapped up. This is during the COVID crash, right? We gapped up big. And that gap stayed in place for a very long time. I think that we could be facing another one of those types of gaps where I think the VIX is going to continue to go up. And I think we're going to leave that gap back like we did back here. I think we're going to leave that gap behind because, that gap was formed on February of 2020, but it didn't fill until April of 2021. You see, it took more than a year for that gap to fill, and then we started to reverse. So again, that volatility index is also known as the fear index. We know that investors are feeling some pain. They're getting stressed. And that brings me to some of the data that I pulled up this week. If you look, Ford cut 3,000 salary jobs out of Michigan. Now, that may not seem like a lot, but, for Michigan and that workforce, that's a big deal, right? So this is what we're seeing as we progress into this recession. And I do believe that the recession is going to get much deeper than many people think. I even believe that we could see a depression. And I'm not going to get into that. I'm not fear-mongering here. I'm just giving you the news as I see it. This is the facts that you're not going to see on a lot of the financial stations. And I tell people that if you want to really get a feel for where this economy is going to go out to one of the food pantries and talk to the people that are in line there. The lines are getting longer. People are getting more stressed. Talk to those people. They could care less about the stock market. They're feeling the pain. And this is one of the Gallup polls that came out. This I found very interesting, and it's more an index that's talking about, the pain, the well-being index, as they call it. And you have a record number of people now considered to be suffering financially. At 5.6%, this surpasses what we had back in 2008, right before the crash of 2008. You see that? So again, these are the things I tell people: hunt for the news. Go look for it. Don't wait for the news to hit you on one of these financial programs, or let one of these analysts talk you into buying more stock, on the way down like we had today. Dow is down 1,000 points in one day. I've been telling people, you're not going to see phase 3 of a bear market until you see big 1,000 point moves where circuit breakers are triggering to close the market. We will see that. I'm very confident that in saying that, but I believe we will see that, and I'm trying to get everyone to prepare for that type of a downward move. Now, if you look again here, interesting, this is a leading indicator. Some people say, oh, house prices are dropping. No, this is not the prices dropping. This is the number of homes being sold. So sales are dropping. Now watch the next slide as it compares this. As sales are dropping, what's happening to inventory? Inventory is going through the roof. So what does that mean? It means there's more for sale signs out there on the front lawn, and they're not selling. This is becoming a buyer's market, not a seller's market. So the number of houses going for sale are screaming to space here. And the inventory is at approaching record levels, back close to where we were in 2007, 2008 before that crash. And look at this. Remember energy. I keep talking about energy. We're bullish on energy, but look at the natural gas futures. This is also going vertical. Remember where the natural gas market was prior to the crash of 2000, prior to the crash of 2008. Look at this. We are approaching, this is the third highest level that we've had in decades. And why is that significant? Because natural gas is not used just for, developing nitrogen fertilizers and such like that. It's also used to generate energy. And between oil going up, because look what happened with OPEC. This came out this week. OPEC is slowing their production despite the higher prices. What is that going to do? It's going to deplete supply, increase demand, prices soar, contributes to what? Inflation numbers, although this is not measured in core inflation. Remember, I said that last week. It will contribute to that baked-in inflation that is going to be so determined to go higher. And that's what's happening. I'll talk about those other things in a little bit, what causes that to happen. But this is a scary chart right here. This is the emergency strategic petroleum reserves plummeting. Remember, we have been selling our oil to China. It's mandated that we keep a certain level in that strategic reserve. So we're going to have to replace that. Now, remember, as I just said, if OPEC and oil is going up with natural gas, the cost of replacing this is going to cost taxpayers a tremendous amount of money. Right? We are paying this bill. The government doesn't pay anything. We are paying it. You might say, well, the government's borrowing money. Well, no, they're printing money. They're creating inflation. And so you really got to keep this in mind. This is a very scary chart because we're now at the low levels we were during the oil embargo back in the late 70s, early 80s right here. And I think we're going to go a lot lower from here before all is said and done. Now, this is the sweet crude. This is the oil as it trades on the Mercantile Exchange. And this is a weekly chart. It's hard to see. I'll magnify that for you. But last week we had a hammer pattern. This week we have a bullish engulfing. Right on a trend line, right on a key roll reversal. This is former resistance right there. That was broken here. Turns into support. Double whammy of a support level. I think oil is going to go set record highs by the end of this year. It's going to, again, contribute to costs right across the board. And if you look at this, what does all this have to do with the cost of electricity and energy and such? Well, look at the green line right there is electricity going straight up. Now, why does this matter? Well, everyone's pushing electric cars, electric vehicles, right? California is trying to mandate that everyone has an electric car by, 2035 or something like that. Good luck with that. You're going to have people fleeing the state before they have to be, forced to drive an electric car. I'm in favor of electric cars. I like solar panels. I like electric. My Enphase battery bank is cooking here in Florida. It's doing great. But to put that much stress on the grid and energy costs going higher by the day right here, going vertical, that's going to take a toll on Americans as they battle for paying just the electric bill. Here's a chart that's pretty interesting. Now, this is higher than what I'm showing because this bar ends in June. Did a little research. We're now over 18 billion. What does that mean? That means people are behind in their utility bills. They don't have enough money to pay the utility bills. That's a leading indicator, folks, of what's to come in our economy. If they can't pay the bill to keep the lights on, lights go out, what does that mean? That means they're even having a hard time putting food on the table for the kids as well. Right? This is, again, these are leading indicators. They're not lagging indicators. And you need to pay attention to this very closely. You know, when people can't pay the electric bill and they can't put food on the table, what's going to happen? Well, they're going to miss their car payment, right? They're going to miss their car payment, truck payment. What does that mean? Well, here's the United States overnight repo rate. Check this out. This is going straight up. The number of repossessions are going straight up. It's going vertical. If this doesn't shock you, then it tells me you're not paying attention. This is shocking information. This is data that you have to look for. Not just talking with people and finding out, how they're feeling, but go out there and find out what's happening in their lives. And the stats are telling us a big, powerful story. Now, this is one that affects me and a lot of other people in our rural area. But the cost of hay obviously is going to bake itself into the cost of beef and such. Now, we feed hay to our horses, especially in the wintertime. And so we are currently feeding our horses square bales, but we're going to be converting to round bales. The only reason I don't go to round bales right away is because you got to get your horses vaccinated. Go talk to a vet. There's bacteria in the middle of these as they sit out there with the moisture in the middle of the bale, and it could affect the horses. But cows, they're just super strong. If the cost of hay is going up, then the cost of your beef is going to go up. And the cost of food right across the board is going to go up. Agricultural costs for farmers is already reaching highs, and it's putting a hurting on them. And so you got to pay attention to that as well. Remember, since the war in Ukraine, the key exports have fallen by almost half. Now, Ukraine is a key agricultural country. I think the third or fourth largest exporters of grain in the world. And as this continues to take its toll, the war takes its toll on the farmers and exports, ultimately that's going to hurt each and every one of us in the pocketbook as we go and try to buy our food, right? Now, while that sounds all depressing and maybe, dark and scary, please understand, folks, that we're making money on the way down. And if there's any members out there that are hearing my voice right now and you want to share some of that success on our comment page there, go right ahead. These aren't income claims. I can't guarantee you're going to get 200% or make millions of dollars in one day like some of our traders do. You know who you are, right? That's not a claim, a guarantee or anything. But talk to some of our members. Interact with them. Put your photo on your YouTube page there. Let me see your face and let me meet you one day, maybe in Dallas or somewhere. Let's become friends. Let's look at what's happening in this market together. Let's not panic. Learn how to make money on the way down. Learn how to protect your positions if you're buy and hold. Learn how to preserve your money for retirement. Don't panic. Don't panic. There's really a reason here to celebrate because this is so predictable right now based on Dow theory. Go study the 6 tenets of Dow theory and you'll see that this is a very exciting time. This is one of the rare times in my 40-year career where we can make more money than ever before on the way down. I made money in the crash of 2000. I made money in 2014 through 16 on the way down. I made money in the crash of 2008. When did I not make money? I didn't make money in the crash of 1987 when I was a green trader with only 5 years of experience under my belt. I made big mistakes in that crash, but I swore to myself and I committed to our clients at the time that I would never, ever let that happen again. That's why I developed the 1% rule for managing risk in 1988. Never have I lost money since then in any given year. I've lost in individual trades, but at the end of each year since 1988, I have not had a losing year. And that's what I'm trying to show people how to do, right? Learn how to trade options. It takes time. Yes, it's not rocket science, though. Learn how to read the charts. Learn how to read candle charts. They're hundreds of years old. The Japanese rice traders developed candle charting for trading rice. They're proven over centuries to work as forecasting tools. They didn't have computers. They didn't have oscillators down here. They didn't even measure volume. They took black ink on white rice paper and they made rectangles, right? They didn't have colors. They had open and closed candles. Down candles were all black. Up candles were just outlined in black rectangle with a white in the middle because the paper was white, right? It was very simple for them. And the candle charts give you some insight as to the emotional content of the buyers and sellers. And right now, like I said before, sellers are in control. So that is my report for this week. Thank you so much again for liking and sharing and subscribing and becoming a member of Market Rebellion as well. If you become a member of Market Rebellion, you'll get these alerts sent to you email automatically so you don't have to go hunt for it. And we're doing that to make sure we get a backup. You know, if anything ever happens with the internet or YouTube or whatever it is, you'll still get my report guaranteed. And so with that, I have a great weekend. Enjoy this market, and we'll talk to you next time. Bye-bye.
Hello, John Najarian here. If you want to trade like a rebel, if you want to party like a rebel, well, you got to come to RebelCon 2022. It's going to be in Dallas, Texas, at the fabulous Four Seasons Resort. We start the 21st of September, go until September 24th. It will be more fun and more live trading than we've ever done before. That's why it's called RebelCon 2022. We're going to have barbecues and double the amount of live trading. So if you want to book that now, make sure you do, because the guest speakers, as soon as we announce those, this thing's going to be sold out. It's going to be something you do not want to miss. Limited to 250 people. Sign up now for RebelCon 2022 at the Four Seasons in Dallas, Texas.
Welcome to the Rebellion.